Welcome back to Bazaar Morning Call. Hope you're having a good morning. For starters, the SGX Nifty suggesting a bit of a pullback, 60 points odd. Well, Gurmeet Chadha, Managing Partner and CIO at Complete Circle, joins us on the show. Hi, Gurmeet. Good morning. Well, the big deal that came overnight was Poonawalla, the housing finance arm has been sold, and they're getting a valuation of roughly around 3.5 times odd. My question to you is, how do you, look at the stock from here on? And more importantly, does this, re-rate the other housing finance companies, or should we be looking at this deal in isolation?
So I think pretty positive for Poonawalla. Also, if you see, Nigel, their operating metrics, if you see last quarter, their disbursements are up like 30% plus. In fact, quarter on quarter, the AUM growth was up. I think that their entire strategy of first writing off aggressive write-offs of the legacy book they have, and the recovery rate has been very good, has also managed to pull down the credit cost by, it went down to almost 0.8%, which was very positive, has run up, reasonably well compared to the other NBFCs. They continue to expand both physical presence as well as digitally. And I think continue to do well even on the new products which they're launching. So pretty constructive on it. I think there'll be, I don't think so. I agree with you, should be looked at more in isolation than, which are again the quality of the book you have rather than just, broad basing it for the entire industry. Also, I think that the work they are doing on the deposit base is something which we need to track, because what will happen is the cost of funds will inch up much sharply for NBFCs vis-a-vis banks. So players like Poonawalla, even something like Bajaj Finance, which has a very retail deposit base, I think that will be a big differentiating factor as we head into, the next year.
Okay, Gurmeet, hi, good morning. Always great seeing you. Another stock in focus this morning is IRCTC on the back of the OFS of 2.5% that the government has announced. What do you do with a stock like this?
So this is one stock which, as it's we say that in cricket parlance that a lot of potential, but, somehow, not taking off the way it should. If you see last quarter, they booked almost 107, 108 million tickets. This is like 11 crore tickets booked in a quarter, makes it probably one of the most heavily transacted website in Asia Pacific, if the numbers are correct. Convenience fees almost 200 crores. So I think that flip-flop on convenience fees has created some confusion. So I think it probably will take some more time. Also, the railway need and their catering business, I think, will recover. The need expansion now is in place. So I think the daily bottles will go up from almost 1.5 to 1.7 million now. And the tourism business continues to drag. My sense is they have to probably, for a bigger re-rating on the stock or a larger move, I think they have to figure out a way to monetize this traffic they have on the portal, in terms of either marketing or upsell and cross-sell opportunities. If they can do that, there's a lot of potential there. But with the OFS now, there could be maybe some near-term pressure, but remains a very, very good stock, one of the better stocks in the PSU basket.
In the 2021, I'll stop short of calling it mania, but in some sorts it was. You could call this call that period IRCTC. You can almost use IRCTC as a example to describe what was going on. It was just incredible, right? From a low of some 250, it went up to 1300, recently it's done well. From 500, it's come up to about 700. So we'll see. But good points there. Gurmeet, hi, good morning. So just a couple of points, if you will, on public sector banks and what do you make of it? I put out a piece yesterday basically looking at where all these stocks are, some 6 stocks, and where these 6 are compared to their respective historical year forward price to book multiples. 4 were already there and 2 had some distance to go. Now that is one way to do it. You can slice it in other ways, but what's your thought process?
Amazing run, Prashant, taken probably everyone by surprise. I think, but you also have to be careful that the big mistakes happen when the credit growth is high, which is in this case. The last time this kind of credit growth came was post 2009, and when you have this 18-19% growth, it's easier to get carried away. I think it's important to see that how and differentiate the risk underwriting standards in PSU banks. They are prone to accidents and frauds. So I would restrict myself still to maybe SBI and BOB. SBI in particular, I think, while it has consolidated a bit, if you see, I've not seen 17% ROE and 1%, 1.5% ROA for a long, long time. They have almost 3 lakh crores of treasuries maturing next year, which will give them a lot of firepower in terms of, since deposit growth is just 10%, uh, continues to do well across metrics. I mean, 17-18% credit growth, advances growth for a size of SBI is huge. And the mix of the loan is pretty good now, 6 lakh crore kind of a home loan book, right mix of, digital with Yono app coming in. So I think it will be the liability side, in my view, which I said earlier, which will be a differentiating factor going forward, and responsible credit growth. So I would stick with SBI, and maybe Bank of Baroda for now on PSU space, and not get carried away with the recent surge.
Absolutely. Gurmeet, stay with us. You were talking about retail franchises like Bajaj Finance, etc. Another